My Home Invest team, how you doing? I hope well. So listen up, Home Invest team. We call it HIT team. Be part of the HIT team for short. Listen up. Tonight we're going to be talking about rents during a recession. So do you think rents go down in a recession? Do you think they go up? Do you think they flatline? Do you think they crash? What do you think happens? Are rents recession proof? It's a big topic nowadays because people are like, if you look at the University of Michigan's certainty study, like showing whether people are certain about the future or if they're nervous about the future, for the first time in 40 years, it's coming in really, really low. This is the lowest that it's come in 40 years. I should say it that way. So I want to know from you, what do you think? Do you think that rents are recession proof? Yes or no in the chat. Let me know what you think. Do you think that rents are recession proof coming into whatever we're coming into right now? Let me do this. Let me actually flip over and I want to tell you about this. As you're typing that, you go ahead and type that. Do you think that rents are recession proof? Do you think rents are recession proof? And by the way, I'm coming in streaming because I'm at an event right now. I'm at an event in Boise, Idaho, good old Boise. I am downloading so much data right here to the good old noggin, and I'm going to be sharing it with you over the next couple of weeks. Like, I'm so glad that I came to this. Sometimes we've got to break out and we've just got to go see what other people are doing here. So I'm with some other really high-level elite entrepreneurs and investors and just listening and learning and all that kind of stuff. But anyways, let me get back to the subject at hand. What do you think? Do you think that rents are recession proof? Do you think rents are recession proof? I want to see who we're hanging with. Okay, cool. There's not a wrong answer because I'm actually going to show you some data that could support, well, I'll just let you see. Okay, so what you're looking at on your screen right about here, this is a property that I purchased a while back, 725 Fuller Avenue, St. Paul, Minnesota. And when I bought this property, I paid $130,000 for it. It's a duplex in the heart of St. Paul, and it was fully rented when I got it. And then what happened is we entered the whole, like, the crash, so to speak, and value started dropping. And I had people telling me all kinds of things. And I was newer in the game of real estate. And I had some maintenance things in the property and whatnot that came up and bit me. And I was getting a little bit nervous. And I got nervous to the point where I literally was convinced that I had to sell it because values in this area, they were going to keep going down. And not having the wisdom that I have right now, I ended up selling it. And you can actually see here in tax records, I bought it for 130, and then I chose to sell it at a loss. I sold it for 55,000. I'm embarrassed even to talk about it today, but I think it's important that we talk about it because I want to actually draw a very, very good point for everyone. The wisdom I gained from the sale was tremendous because what happened afterwards is this particular property, it continued to rent out. And not only did it hold the line on its rental income, but the rental income went up and it kept going up. Even in the midst of the whole calamity of the housing market crash, even though the sky was falling and everybody was saying, run, this neighborhood's going down, all this noise that was out there, the rents went up on this property. They went up tremendously. And now if you fast forward to today, at least the time that we're making this right now, you can see the valuation, at least according to Zillow, right here, they think it's worth $244,000. And we're talking about not that long of a window. We're talking 12, 14 years. And the rents during that whole time never moved. And I had a fixed rate mortgage on the property. Like the mortgage payment wasn't changing, but rents were going up. The taxes, they changed a little bit. They would go up a little bit each year, but not that much. Insurance would go up a little bit, but not that much. Rents would keep going up. So had I held that property, I would have, number one, like literally doubled my money on equities. On the equity side, the valuation went up so much over that period of time, 12, 14 years. But in addition to that, the cash flow would have only gotten stronger each year, even in the midst of that recession, even in the midst of that calamity. And so I want to pull this out as a personal case study. Now, real estate is very, very location specific. Like, not all markets behave the same way. It's not like one big national thing, like you snap your fingers and everything just flatlines. Remember, even during the last housing recession, there were areas in the country, a lot of them, that never went down in housing valuation, not at all. Texas didn't go down in housing valuation. I could cite other ones too, but we won't get into that tonight. But this particular one, like rents held their own. Rents kept going, and so real estate's geographic specific. But in general, my case study analysis so far from the properties that I've held, and I could fast forward on this too. Like I got this one, 1104 Cook Avenue East. This property is not very far from the other one that I just showed you, and I bought it during the relatively the same window a little bit later. This one, the rents kept going up. Even though the value fluctuated a little bit during the recession, rents kept going up and up and up and up. And I was winning. And then I started telling other people about what I was doing. Like, even though I sold short on the other property, I licked my wounds and got back in the game. And I said, okay, I learned my lesson. Let's keep going. And I started showing other people what I was doing. And then I got this property here, me and a few investors. And this is kind of what we do here at Home Invest. We pull together investors and we look at properties like this. And anyways, we got this one, and it was in the middle of calamity, so to speak, in the middle of when people were saying run from real estate. And we got this one. We bought this one for just shy of $500,000. We did some cleanup to it, renovated, all that kind of stuff, placed tenants, and then turned around and sold it for 1.7. I should have never sold it. I should have kept this property. It was beautiful 20-unit building. Anyways, I digress. My point is, even in the midst of calamity, this recession, stuff still happens. Rents weren't dropping in my personal case study. I showed this to countless other people, and one of them is a friend of mine. Her name is Andrea. It's this lovely lady right here with her awesome husband, Chip, and her son. And I showed her this property, 1025 Margaret Street, around the same era. She bought this thing in the middle of the housing crash, so to speak, when values, at least in St. Paul, were at the lowest of their low and everyone else was running away. And she got this property here for $75,000. I showed it to her. I physically walked this property. Beautiful hardwood floors, nice little property. Anyways, the rents kept going up in this property. Even in the midst of the recession, rents were going up on this property. And then values, look at this. She got this one for 75. And now today, valuation, at least according to Zillow, their estimate is 228. So it's easy to look back in history and say, hey, yes, it's a good move to keep rental real estate. It's a good move. Buy and hold, stick to it forever, all that kind of stuff. It's really easy to do that when we're looking from a historical spectrum like this. What we need to look at though now is, what about the future? What could happen? Well, Nate, here's one of the things I hear all the time. Well, Nate, rents just went up too fast. And whenever something goes up that fast, there's inevitably going to be some kind of crash. There certainly could be. I don't want to sit here and pretend to be that I'm the all-knowing one. I'm not God. I'm not at all. But I do look at data. I have been researching, like they say that to become an expert in some subject, you've got to invest 10,000 hours. I probably have 20 to maybe even 25,000 hours into this game of real estate. I obsess over this game of real estate. I do it because it's my financial livelihood. It's what I feed my family with. It's what all of our clients, I've got clients in 2 different businesses in the real estate spectrum. It's what they rely on. I'm in the game. I have people on my team that bring me data, that bring me information, because I'm so heavily obsessed with this game of real estate. Okay, I've got my 20,000 hours of expertise in, and whenever I'm trying to answer a question like this for myself, I look at the data. I look at my own personal case studies. I turn to my mentors. I look at their case studies, and I look at the other data that's around us. So let's keep digging into the data. Are rents recession proof? That's what we got to figure out with this, because if we do have some kind of shakeup in the marketplace, which it's going to happen, I just don't know when. None of us know when. Like, you can't fly a plane. It's like literally, this is what's happened since 2008 to 2012. We went through that last recession, 2013, maybe, depending on the zip code we're talking about. And what's happened since then is the government, they've been doing this thing called quantitative easing. They've been printing money, essentially. It's a loose way of saying it. But they've been doing quantitative easing, meaning they're putting money into the system. And they've been doing that since 2008. And that's kind of like, putting gas in a plane and then letting the plane take off. And then the plane never has to land. Never has to land. Imagine that. It just keeps going and going. That's what the United States economy has been doing since 2008. They pumped this quantitative easing money in, this gasoline in this plane, and the plane's never had to land. It's never, ever had to land. And now, right now, at the time that we're doing this, the Fed announced that it's no longer going to be doing the quantitative easing. Instead, they're tightening monetary policy. The last time they tightened monetary policy by jumping up interest rates and not printing money like this, doing quantitative easing, what happened is we saw a blip in the housing market. And we'll look at some of that data as we go through this. So right now, I don't know what's going to happen. Like, I wish I had crystal ball and I wish I could tell you, but I really don't know. And no one really does. I know some of the hedge funds that I work with right now, one of them in particular, very sophisticated hedge fund, has all the data in the world, has a ton more money than I'm managing right now with assets under management. And the data that they're pumping out, they show that there's still a major shortage. So even with interest rates rising and all that kind of stuff, we're still going to keep seeing a run up. And so I look at stuff like that, and it's very interesting to me. And I'll show you some more stuff on this too as we kind of dive into this. Okay, let me actually continue to dive into the data itself. Okay, so probably the best data that's out there on rents specifically comes from two different sources. There's one from CoreLogic and there's one from Atom Data Solutions. We're going to dive into both of those. Okay, so we're checking this out right up here. Atom Data Solutions, they're showing right here that rents are even less implicated by a recession. Rents are even less implicated by a recession. What the heck does that mean? Let me actually zoom in so you can see that full screen right here. Rents are less implicated by a recession. What Atom Data Solutions is basically saying is, hey, we don't think, from all of our data, housing prices, yeah, they do fall down. But rents themselves, no, not much. Geographic specific areas for different reasons, job loss, all that kind of stuff, they can fall for different reasons, but rents themselves, not very much, not enough for them to make an impact anyways. So I've been combing through all this data, by the way, to prepare for this and for my own knowledge and all that kind of stuff. And the only diagram that I can find, and any data that's out there that shows a little bit of a blip in at least the last 20, 30 years of rents receding or going back during a recession time, is right here from CoreLogic. CoreLogic is showing about, maybe at the peak, a 5% rent deduction in the high tier house prices. It's not even like the mid tier, the average tier, anything like that, but the high tier house prices. So that's it. That's it, ladies and gentlemen. Meanwhile, what's happened over the last couple of years is this: rents have jumped. Okay, well, I shouldn't even say a couple of years. I should say last year. In the last year, rents have jumped. And it's partially because what we saw, let me blow that up for you. You can see it right here. Okay, you can see rents jumped right here. Big time jump. And it's partially because what we saw during the whole like pandemic stuff is that a lot of rents were frozen. Landlords couldn't do much. Even if they wanted to, they couldn't do much. And so rents didn't move. And then another thing that happened, and this is a little bit of a psychological feel thing, but we as Americans, and actually worldwide it's happened, we really started putting value on our home. We're locked in our house for this long period of time. We're working from home. We're living from, like, all this stuff. The emphasis on the home became much, much more important. And so now it's a big deal for people. So that's why we've seen housing prices surge. People want space. They want everything that, you know, is important to them if they're going to spend so many hours working and living at home. And then additionally, it's true for renting out. Okay. So it is what it is. It's not going to go backwards. That's my prediction. Okay. This is Nate's crystal ball talk. It's not going to go backwards. I don't think, however, we're going to continue to see the run up that we have in the last year. I think that the run up that we've had, eventually, you can't have rental increases that outpace wages by that much. It just the income in the area just wouldn't support it. So that's my theory on the thing. I think that we'll probably see more moderate rental increases from this point forward. I don't see us rescinding backwards. I do believe that rents are almost recession proof. I showed you the graph right here. Literally, even the high tier rentals only dropped by 5% during the last recession. And that's geographic specific. That's not just a nationwide snap your fingers thing. So there you have it. That's the data on this. So where do we go with this from here? Well, if we dig into this deeper and we start, you can look at all the expert sites out there from Go Banking rates and from all the financial forecasts on rents and all that kind of stuff. They're all going to pretty much draw the same conclusion if they're looking at the data. Rents are not going to go backwards. Housing prices could, like, there's these theories out there that we're in a bubble and all that kind of stuff. So housing prices could pop. They could go backwards. I'm just not seeing it right now. Okay. I don't know when the hour will come. kind of like we don't know when the Messiah is coming back or when God's coming. We don't know that. No one knows. But the fact is that it could happen. Okay, housing prices could rescind. I don't see, however, rents rescinding. Therefore, I don't think commercial real estate, multifamily specifically, is going to rescind either. It could. I could be wrong, but I don't think it's going to, because a multifamily property is actually valued by the cap rate. It's valued by the rental amount. And so if rents are continuing to rise, then it's really hard to devalue the property. Now, you could make the argument that the value of some of the multifamily properties could drop because interest rates have gone up. And if you made that argument, you could be right. You could be right. Okay. But the rents overall, I think, are going to trump it. It would be a temporary blip. And then eventually we've got stabilization for the multifamily real estate game again. Okay. Let me show you. Okay. If you look at who's buying up most of the new construction properties right now, and I'm talking not just like individual single family houses, I'm talking communities of houses nationwide right now are being bought up by investors, people with sophisticated capital, like people investing into hedge funds that are placing capital for them into real estate. 25% of all properties, new construction bought in the fourth quarter of 2021 were bought by investors. New construction houses being built for rent. Okay. Same thing with these multifamily real estate projects like this. Okay, so my group right now, we're in the middle of doing due diligence in this property. Beautiful, 16 units. We've got a couple more that are a little bit larger. One of them is a 72 unit coming up pretty soon. We're going through this. What we're doing that's quite different than maybe what the average person is doing is we're just underwriting with conservative numbers. So instead of just like believing that interest rates are going to stay the same, or believing that we can still get the 4% rate that was there for us in the last 6 months, we're not doing that. We're underwriting very conservatively. So we're taking our numbers on projects like this and we're saying, okay, well, instead of just relying on a 4%, what if we budget a 6% on the loan? Which is ridiculous to even think about. Let me blow the sheet up for you so you can actually see this. Okay, you can see right here, I put in a 6% number on this one. I'll blow it up so it's even bigger. I put in 6% on this one. That's ridiculously high. We're not going to pay 6% interest rate now on a loan like this. We're still going to be able to probably get it in the 4s and lock in for a nice 30-year long-term fixed financing, all that kind of stuff. But we're underwriting with a lot of conservative assumptions. I'm underwriting, even if I have to drop rents a little bit, 5%, whatever it might be, I'm underwriting that way, even though I don't think that's going to happen. And that's how we play this game safely. That's how we play this game and win this game long-term, even if there is some blip in the radar, some shakeup in the housing market, okay? So that's what we're doing. I want to know what you're doing too. I want to know what your plans are. If you're looking at property right now, what are you doing? I'd love to know more. I'd love to explore this. If you are an investor looking for a project right now where you can be a passive investor, literally have some team like ours, my team in this case, physically do the work, go out there, find the property, underwrite the thing conservatively, make sure that all the property management is in place and collect rent, and then you get distributions. If you're looking for something like that, I would love to have a conversation with you. I'd love for you to basically let us know you're looking for a project like that. So all you have to do is comment below the word multifamily, or you just put multi for short. Put multi. Put MULTI in the chat. And then what will happen is my team will reach out to you. It'll either be Gabriel or Katie, both super nice people. They have nothing to sell you. They couldn't sell you something even if they wanted to sell you something. Literally, they're just going to set up a time. They'll jump on the phone with you. They'll ask a couple questions around scheduling, and then they'll set up a time for us to talk. You can either get on the phone with me or my business partner or Sue, all super active, actual real estate investors investing our own money in projects like this. And we'll tell you about our projects. If there's a good match and you have an interest, then we'll talk about what it would look like to potentially work together. If there's not a good match, I'm certain we can probably refer you to somebody else. But if you're interested in something like that, then all you have to do is type in the word multi in the comments below, and then we'll find a time to connect. In the time being, I'm going to keep doing my research. I'm going to keep digging in. I'm watching this so closely. I'd love to know what you're seeing out there. As always, you can ask questions here. You can go ahead and type them below, and we'll be sure to answer them for you. And then if this has been helpful for you, then do me one giant favor, maybe two. smash that like button for me, press the like button, and then type a comment below. Even if you don't want to, get on the phone and talk, just type some comment below. What'd you learn? What'd you think? That will bless the algorithms of these platforms and let us get this word out to more people. So I would appreciate that. Okay, again, if you want to jump on the phone and talk, you type the word multi below, and then we'll jump on the phone. We'll talk sometime soon. Okay, thanks much. God bless. We'll see you